Did you know that there is a loan that will actually allow you to purchase a home and rehab or fix the home up? It's called a rehab loan, but more specifically, we're going to talk about the FHA 203K Rehab loan. Before we go any further and we talk about this loan, let's go ahead and make a deal that if you learned something from this video that you didn't already know, you owe me a follow. I'm Loan Officer Lakeisha, NMLS number 1816247, aka Key with the Mortgage G, and let's jump into 203K FHA loans. All right. Now, this loan is a loan that allows you to pretty much buy a home, and if the home needs some repairs or it needs to be remodeled, you want to fix some things up, it lets you in one loan buy the home and do those repairs and fix the home up. So what is a rehab? A rehab could be, you don't like the flooring, you don't like the roofing, you know, it needs painting, things like that. Those things can be done with the loan as well as you purchasing the home. 203K FHA loans have two types of loans. There is the standard, and then there's also the limited. Now, the differences are the standard is anytime the rehab work is over $35,000, you're going to use the standard. The standard also requires you to use what's called a HUD consultant, who is like a supervisor and overseer of the program. And then the limited is anytime your repairs only cost less than $35,000 and you're not required to use a HUD consultant. Now, you can use a HUD consultant with the limited if you want, you're just not required to. Again, what I said you can do is you can remodel a kitchen, you can remodel a bathroom. If you need new appliances, the appliances are outdated. You want to put in another sink or toilet. You want to, fix flooring, roofing, painting, HVAC systems, etc. You can do all of these things with the loan on top of using that loan to purchase a home too. So in this market, a lot of people are priced out. Their price point isn't really up to what they are seeing in the market. So this is a great loan for those people who want to buy a home at a cheaper price and they are willing to, wait a little bit, get down and dirty and put some money into it, and they can really see the vision. So you might see a home, and it doesn't have to be distressed, old rundown homes. Again, this could be a nice home that just needs updating. I know you guys have seen those older brick homes that's got that like tile in the bathroom, those old cabinets, those stoves that are like in the cabinets, those kind of things, and they're really great homes. I personally prefer the older style brick homes, but they might just be old. They might have been, hadn't been updated since the 1940s or 1950s, so they're old, but it's really overall a great home. This would be a great loan for that because you could really remodel it. You could redo that kitchen, you can redo that bathroom, make it really up to date and modern. So it doesn't have to be a really distressed home or that needs a lot of repairs, or it can, but this loan will pay for you to purchase the home and those repairs. You have to make sure that you have all of your ducks in a row. And one of the first things that you want to make sure is that you have a well-versed contractor and a contractor who has completed 203K loans. That's one of the biggest things that is going to make or break this process, is having a contractor who is well-versed in 203K loans and they have also completed 203K loans in the past. That's going to be the main thing that you're going to want. Secondly, you're going to want a lender who is well versed in 203K loans and they've completed some as well. Those two things are going to be the things that can really make this process seamless or a headache and make you want to just pull all your hair out. The contractor, of course, they're the ones who's going to be doing the work for the repairs. So that's why it's important to make sure that they know about the loan. They know what they're doing. They know what to expect. And you want to generally interview about 2 to 3 of them. You want to do this before you even go start looking for homes, before you go find a lender and you try and get pre-approved. You want to find 2 to 3 general contractors, preferably, that are well versed and have done 203K loans. Once you've done that and you've got them lined up and you've interviewed them, then on to the lender. Again, you want a lender who's well versed, not just a lender who knows regular FHA loans because it's different, not just a lender that you see who is just closing all the time because this is a whole different beast. You want a lender who knows 203K loans and they have done them. After that, you want to use them to get pre-approved. Now, the realtor, you can find a realtor who's well versed in 203K loans. That's a plus. But even if they're not, that's not a deal breaker. That's okay, because your realtor's main job is to find you a home. So they're going to take the direction really from the lender. So if your contractor and your lender are doing what they're supposed to, your realtor does not necessarily have to be well versed in 203K, because they're taking direction from the lender. The lender's telling them what's going on. And again, finding a great lender is important for that, because you want a lender who's going to communicate to your realtor the steps and what's going on. So the realtor knowing 203K, again, if they do, that's a great plus. But if they don't, that won't make or break your deal, really. After you've, lined up your contractor, your lender, and you've got your realtor, you want to apply with your lender to see how much you can actually get approved for. So you don't want to go out, start looking at homes, do any of that, because you've got to know what you can afford. You have to know, have the lender give them all your documents, run your credit, look at your assets, look at your income, look at your debt to income, and find out exactly how much you can get approved for. Now, with this rehab loan, again, it's different from a standard FHA loan, because if you're approved for $300,000 with an FHA loan, that means if you're going to use a 203K loan, that means that your purchase price of the home and the repairs have to be that $300,000. You can't go out and find a house that's $300,000 and then get repairs on it, because you're over. So whatever they give you, that is the maximum amount that your purchase price of the home plus the repairs can be. So if they give you a $300,000 pre-approval, you find a house that's listed at $200,000 and you determine it needs about $60,000 worth of work, that's $260,000, give or take. There's some other underlying things that could be wrapped up into the loan, which might push it, $265, $275, but that would work. So whatever you're looking at as your purchase price, you have to make sure that your loan amount will cover the purchase price plus those repairs. All right. As far as you as the buyer, we've talked about, the lender, the contractor, the realtors. As the buyer, your most important part and what can make or break the deal is, as with any loan, getting your lender documents in a timely manner, as well as when they ask you to sign something, doing that in a timely manner, because you can make or break your deal as well if you're not getting your lender the things they need, if you're not signing documents generally within 24 hours. Unless it's something that, has to take time to get and it's something out of your control, you should really try to have documents signed and documents that your lender asks you for within no longer than 24 hours to keep your process moving. And that's with any loan. Now, that is your responsibility during the loan. Again, if you found a great lender, when you went and got pre-approved, they will pretty much have asked you for the majority of the documents you're going to need. And then when you find a house, it should be very minimum what you need, because they should have done their due diligence up front. But all lenders are not created equal. So again, you need a great lender who's well versed in 203K, because they'll know what to ask you for in regards to a 203K loan. Now, once you've got that pre-approval, you got that in hand, you know how much you can qualify for. Now you want to go find homes. You want to go look at homes that are, of course, under that pre-approval amount, and you find a home. So let's say you got pre-approved for $300,000. A home is on the market for $200,000. You like the home, you like the neighborhood. It's a brick home. It's got a lot of space, but it needs some repairs. The roof might be a little, it needs a new roof, or it needs some roof work. Again, might have that tile in the bathroom and you ain't really checking for that. It might, the carpet might need to be pulled up and redone. Maybe you want to put some hardwood down, but you could really see the vision and could see this home being nice. Think of like fix and flips, you guys. People who find homes that are distressed or, that need work, and they go in, have a contract, completely flip it, and then they put it on the market. It looks like a completely different home. You have to have that vision. You see these things that you may want to be done. Personally, I think rehab loans are a great happy medium between a new construction home and purchasing a home already on the market resale, because you get to basically pick out your own things. So it's kind of like new construction, but you don't have to wait as long sometimes as new construction. And you don't have to compete, because not everybody can see the vision or are patient. Something you can do is if you have a contractor and you've talked to them, you can have the contractor come with you, an inspector, those kind of things when you're going to view the property and things like that, and have them kind of give you an estimate of what they think it would cost to do certain things. But there's no way to really know until you get into the process. But you find this $200,000 home, you take a contractor with you, or someone who knows contracting work, and it doesn't have to be somebody that is going to do the process. If you know someone and they're not necessarily licensed, but they know how to look and estimate and things like that, and you want to take them just for an estimate, that's fine. You can do that. They may not charge you like a contractor and inspector will. That's on you. But when you go, you do want to have someone that can kind of estimate what you're looking at, because remember, you've got that set price. You don't really want to go over that. Now, I wouldn't think it would cost over $100,000 for repairs, but if you got that house at 200 and the repairs were 150, you be outside of your budget. Now, usually that's not going to happen, but that's the reason you want to, when you're going to look at the homes, kind of have someone who can give you an estimate of, this is what I think it may cost for these things to be done. So you go back to your lender and you say, hey, I found this home. I think I want to, go under contract on, and your lender says, okay, what do you think, estimated cost may be? And then you tell them, we're estimating this. Your lender reworks everything, gives you kind of some preliminary numbers. Okay, this is what you're maybe looking at for a monthly payment. This is what you're looking at, that you're going to need for cash to close, things like that. Also, with this, it's going to be, again, 3.5% down, because it's an FHA loan. So they're going to tell you, this is your down payment. This is what you're going to need at closing. Whether or not you may want to ask for seller credits, XYZ. Your lender tells you all of those things, and you say, okay, I can handle that as a monthly payment. I can handle bringing that to closing. You tell your realtor, let's put an offer in. Where having a good realtor comes in is, again, realtor doesn't have to be well versed in 203K, but the realtor needs to know that they are writing the offer up and putting on the offer that it's an FHA 203K loan and not just a standard FHA loan, so that the listing agent, they don't expect that this is a normal FHA loan that's going to close in a few weeks. They write the offer up with it being an FHA 203K loan. Now, you generally want to write the offer for 45 days. Most of the times you can close regular FHA loans in 30 days or less, and the contracts are written for 30 days. With the 203K loan, because it is a little bit more involved, you generally want to write that contract for 45 days. And if everybody is doing their part and all the moving parts are working, you can definitely close a rehab loan in 45 days. Now, sometimes that 45 days can get extended to 60, just depending on different things that happen. But it absolutely can happen if all the moving parts are happening and everybody's doing their part. And again, having a well-versed team. You write the offer, your agent writes the offer. Your offer gets accepted. Now you go back to your lender with that contract. Now everything starts. Again, if you have a great lender, they pre-approved you and did most of your work up front. So now they're submitting your loan, and you as the buyer shouldn't have too much that you have to do. You will have to sign some documents. Something that you're going to have to decide is whether or not you want to finance the first 6 months of payments into your loan. This loan allows you to take the first 6 months of payments and finance them into the loan, because they know that you may not be able to live in the home for the first 6 months, because they have 6 months to complete the repair. So if this home is completely unlivable, you may not be able to move into it until all the repairs are done. So you have the option of telling your lender, I want to roll the first 6 months of payments into my loan. So for 6 months, you have no mortgage payments. That's an option. You sign a paper for that, and you're going to have a lot of documents that you're going to have to sign. You may have to give additional bank statements or things like that, once all the numbers are worked out. But you shouldn't have to do too much. But whatever they ask you for, make sure within 24 hours you're trying to get them those things, or as quickly as possible. Okay. So they go do all of that. You sign all this paperwork. They're going to have to vet your contractor. During this process, they're going to vet your contractor. Something you can do when you're talking to those contractors, remember I said do this up front. That's because you can go ahead and have a leg up. The bank is going to do it. Your lender is going to do it, but you can go ahead and have a leg up so there's no surprises. Generally, all contractors that are licensed they are licensed by like the LLR. That's what it is here. I don't know if that's what it is everywhere, but generally every state you can actually go. For here in South Carolina, we can go onto the South Carolina LLR. We can go and we can see if the contractor is licensed, if their license is active, if it's lapsed. You want to have done that when you're interviewing those contractors to make sure that they're licensed and that it's active, because if you get through this process, the lender goes to validate your contractor and they're not licensed, that's going to stop you dead in your tracks. That's why I said in the beginning to make sure you interview like 2 to 3 contractors, just because you want to make sure you have some backups. Now, you do only want to use one contractor on the process if you can. So if you can find one general contractor who can do all the work, that's best case scenario. You don't really want to have 2 or 3 because if you have 3 contractors and 2 of them are on their stuff, they're doing what they're supposed to, they're hitting their marks, but that last one does not, they're gonna mess the entire process up. So best case scenario is to actually only use one general contractor who can kind of just do all of the work. So keep that in mind. You want to interview 2 to 3 of them just to make sure you have a couple lined up in case something does go wrong during the vetting process, but you do generally only want to try and use one. That way you don't have to worry about, you know, having to check multiple different people, because again, they can make or break your process. Have the other ones as a backup, but definitely try and just use one. Now, again, the contractor does need to be licensed and bonded. There are generally ways you can go on when you are interviewing them to make sure their license is active. They will have to provide their licensing, their bonding, their insurance. You want to make sure, again, that they've done a 203K loan so they know what to expect. They know the paperwork and everything that they're going to have to fill out, because some people are not, when they get to filling out their paperwork, they're going to be aggravated with all the stuff they have to do. So if they've done it before, they're familiar with it. The contractor in most cases will also have to provide references for work that they've done. Most lenders will require that to show that they have, you know, been doing it. Some lenders will require they've been a contractor for a certain period of time. And then again, the contractors will have to complete paperwork. So having a contractor who has done it before, they're not going to be shell shocked with everything the lender's asking them for, and they know that they need to get it within a timely manner. So that's just going to be best case scenario, is finding a contractor who's well versed and done a couple of 203K loans. Now, back to the process. You know, submit everything up. You've got your contractors. You've submitted your contractor to the lender and said, this is the contractor that I want to use. Your lender's going to start vetting them and making sure they're good. And then if you're doing the 203K standard loan, you have to have what's called a HUD consultant. The HUD consultant is like the overseer of the project, and they're going to be there throughout all the way until all of the repairs are done. They're like the supervisor of the project. So you don't have to use one if you're using the limited. Remember, the limited is if the repairs are less than $35,000. You don't have to have a HUD consultant, but you can hire one. But the standard, they are going to require a HUD consultant. So if you're doing the standard, the HUD consultant, once you've got everything worked up, you've got your contractor, you know this, you want to get this home, you want to get the repairs, the HUD consultant is going to go out to the home and do a visual on-site inspection of the home. What they're going to do is they're going to make a list of things that are required for that home to meet HUD guidelines. So if you've heard before, you purchased a home before, you know, or seen the process, generally you get like an appraisal done, and the appraisal has to meet HUD guidelines. Well, the HUD consultant is going to go out and they're going to say, this needs to be done, this needs to be done, this needs to be done in order for it to meet HUD guidelines. And then that HUD consultant is going to get with you as the buyer and say, okay, these are the requirements, these are the things that have to be done so it'll pass a HUD appraisal inspection. Tell me what you want to be done. So they're going to get the requirements, the needs, and then they're going to get your wants. You may say, hey, I want to remodel the kitchen too. Even though the kitchen would pass how it is, I want some stainless steel appliances. I want to, you know, pull those cabinets out. I want to do this. So you give them your list, they compile it with their list, and they do what's called a work write-up. That work write-up is a list of all of the expectations of what needs to be completed and what the contractor will do. It's broken down by material and labor. It has all of the things that will be done, the cost of the material, the expected cost of the material, the expected cost of the labor, and then it's a list of things. Now, your contractor has one of two options. The first option is they can take that work right up and they can see all of that work and they can say, yes, I will do that work. And then they can submit what's called a bid or a quote. And they can say, for me to do all this work, this is what my material and labor fees are going to be. And they can submit that. The HUD consultant will then look at it and say, okay, let's just say that the HUD consultant said all of this stuff is going to be $50K. The contractor may say, nope, it's going to cost me $55. The HUD consultant is going to look at the contractor's bid and they're going to say, okay, that's not unreasonable. That could be, $55,000. Or the contractor could say, hey, I'll do all this stuff for $40. Even better, right? Because that's saving you money. The HUD consultant is going to say whether or not, but now if the HUD consultant says 50 and then your contractor says 90, the HUD consultant may say, you know what, that's not accurate. You're padding it, and they're doing that for you as the buyer. You don't want a contractor that's going to charge all this labor that's not fair and accurate. So that's the HUD consultant's job. But once the contractor puts their bid in and the HUD consultant agrees that this is a fair cost, this is a fair price, they can accept that, or the contractor can do number two, and they can do a bid waiver. What that means is they agree to whatever's on the work write-up, okay? They agree whatever the HUD consultant said, I'll do the work for the cost that they said, and I agree to those costs. They can just sign a form that says, I'm going to waive a bid. That way they don't have to, waste time coming up with a quote, putting a bid or whatever, and doing all that, because that is more paperwork that has to be done. If they want to put their quote in, they have to draw up a quote for every single thing that the HUD consultant has listed on that work write-up. So in turn, they may look at that work write-up and say, 50K is cool. I'll do all of that, and I can do that. That's within reason. I'll do it for 50K, and they can sign a bid waiver. So those are the two options that the contractor has to either put in their bid for their quotes and what it's going to cost, or sign a bid waiver and go with what the work write-up says. Once we have established all of that and everything is set up, that you're purchasing the home again, let's say at $200,000. The HUD consultant said the work is going to be $50,000. Let's just say the contractor agreed to that. Now we have, okay, you're looking at about $250. An appraisal is then going to be ordered. So the appraisal is not ordered initially in the beginning like it generally is with a standard FHA loan, because HUD consultant, for one, has to go out and deem that this home can be brought up to HUD guidelines. Then the contractor has to put in their bids and make sure all of that matches. Once all of that is settled upon, then you get an appraisal. And so what happens is that work write-up and any bids, if the contractor did give some, are given to the appraiser, and the appraiser is going to go out, and an appraiser determines the value of the home. Well, right now we don't know what the value of the home may be, or we know it may not be worth what it's going to be worth later, but they're going to go out, but really their main determination is what the value of the home will be after all of these things on the work write-up will be. So they're going to do a subject to appraisal. Generally, again, when you're doing a regular FHA loan, you have to have an appraisal that says everything meets HUD guidelines. Or if it doesn't, you have to go repair and fix these things, and the appraiser has to go back out. Well, in this case, the appraiser is going to go out. They're going to say, this appraisal is subject to all of these things on this work write-up being done, and I assume, or I say that it's going to be worth, once all of that stuff is done, $320. So again, you're purchasing it at $200 because it needs work, right? But you're putting $50,000 into it. That doesn't mean the home's only going to be worth $250. The appraiser is going to determine, once you put all that work in it, and they're going to look at other comparables, other things like that, this is what the home will be worth if all of these things are done. Now, the appraiser may also add things to it, because if they find some things that are required for it to meet HUD guideline that's not on that work write-up, those things have to be added and they have to be done. So if they agree that all of those things bring it to HUD guidelines, you're good. Or they may say, you know, subject to the work write-up plus this additional repair, and that repair I estimate will cost this. Then HUD consultant would redo that work write-up, get with your contractor, make sure they are still in line with what that would cost and that they can do it. And then once you have all of that and you've got that appraisal, all of the final numbers in, your loan is going to be submitted back to underwriting. Now with everything that's going to be done, it's submitted. You've hopefully given your lender all the things that they need from you. Now they've got everything signed off. You signed off saying, I agree with this work. The HUD consultant has signed off saying, you know, this is this. The appraisal is in. Contractor signed all their documents. It goes back to underwriting for the final clear to close. Now, once you get to closing, this is another reason it's important to make sure that you have contractors who not only know about 203K or not only do work or have done like hard money loans and things like that. The contractor is not going to get that $50,000 at closing. That is very important to know. They are not going to get just that money for repairs and then they go do the repairs. That is why it's important to have a contractor who has done 203K loans and they understand that, because if your contractor thinks when they close they're going to get $50,000 and then they can do this work and have 6 months to do it, and they don't have any money in their pocket themselves to do some work, they're going to be in for a rude awakening, and that can get you all the way to the end. Everything's done and then your process can blow up in your face. That's why you need contractors who have done 203K loans. Now, depending on whether they're doing the limited or the standard, that's going to depend upon, you know, how much your contractor can get at closing, if they can get something, things like that. But generally at closing, they can get reimbursed for about 50% of just the materials, not their labor, but just the anticipated materials. They can get like up to 50% of that. And after that, they're going to do what's called draws. They have a draw where they are going to have to complete work. And again, the HUD consultant is that overseer and supervisor. They're going to have to go out every time at intervals and make sure that they are on track and they're on schedule to complete this within 6 months. And then once they've done so much work, the contractor can request a draw. Every time they request a draw, they're going to hold back 10% of what they request. So if they request $5,000 for a draw, they're going to hold back $500 of that. So they're only going to get $4,500. So again, having a contractor that knows that and doesn't think that every time they request a draw, they're getting that exact amount, especially if they need that money to go purchase certain things and they don't have money of their own. You have to make sure your contractor understands that. There are usually 4 to 5 draws throughout the 6-month period that they can request, but that is at intervals once they've completed work and the HUD consultant says they're on schedule, they're going to complete this in the allotted time. Again, the allotted time is about 6 months is what they're given to complete it. They have to agree that they plan to have this work completed within 6 months from closing. Again, those 6 months, during that time frame, you can finance it as the buyer into your loan because you may not be able to live in your home during that time. But if they don't complete it in 6 months because something happens, you know, whatever the case may be, they can ask for extensions, but it has to be a reasonable reason for them to be asking for extensions and not just, I've just been lollygagging and not doing the work. So again, as I stated in the very, very beginning, the contractor can make or break the deal for you, and that's why. So make sure your contractor is well versed in 203K. Make sure you're mentally prepared if you decide to go after one of these loans, because it's not your typical loan. But if you have a great team, a great contractor, a great lender, and a great realtor on your team, and you do your part, it definitely can be a loan for someone who couldn't otherwise get a home because homes are too expensive expensive. Now, once you get in and you get these repairs done, remember, you purchased this home at $200,000. It might be worth $300 plus thousand dollars now. So you got a good chunk of equity in there because you went in and you made these repairs, and you didn't have to spend that money out of your pocket. You put 3.5% down. Maybe your seller even paid your closing costs for you. So you didn't have to put a lot of money down to get these repairs done. And now you've got a nice home with some great equity to where if you do decide to move in, you know, a year or so or 2 or 3 years, you've built up equity in this home and you've made it a nice home for the next person. This loan is also great when coupled with the $100 down payment for HUD-owned real estate properties. If you don't know about what that is, make sure you look in the description for a link to the video that discusses that. It's a program where you can buy the home with just $100 down payment and then use this loan to renovate it. So this is a great option for people. It's not for everybody. This video, obviously, I can't go as in depth if I would like to because you'd be here for 10 days. But this is an overview of kind of what happens during the process. Don't forget our deal in the beginning of the video. If you learned something from this video that you didn't already know, you owe me a follow. I'm Loan Officer Lakeisha, NMLS number 1816247. Make sure you guys subscribe to my channel so you can get all the videos that come, and click that notification bell so that when I do list video or drop videos, you are the first to know.